to Let's Get the Party Started. We've got a pretty busy webinar tonight. We've got 700 plus registered. Got a bunch of you on. If I'd have known how to have a haircut, I would have had a haircut before I came on. Right, got lots to cover tonight, guys. We're talking about trading models for busy professionals. We'll hit the charts in a moment, but if I may, it has been a while since we did a little story time. I was going to wheel out the old 100-year-old tape reading book. I thought, you know what, you've probably had enough of this. You're like, Mark, keep that book to yourself. We don't want to hear about it. We know you've got a 100-year-old tape reading book. So I'm going to go with Reminiscence of a Stock Operator. If I may, a short paragraph, very apt for the current conditions. We'll hit the screens. We'll look at some stuff. And we'll go back and we'll cover the topic du jour, which is trading models for busy professionals. And really what we're going to cover this evening is, if you're a part-time trader, I get it. It's difficult. There's a lot going on mentally. You want to be at the screens. You feel like things aren't going as well as they could be. When you are at the screens, nothing's happening. When you're away from the screen, stuff's happening. So we're going to cover all that. Going to cover the kind of the mindset around it and give you some ideas on how to deal with this situation. So I don't want to get ahead of myself too much, but that's really my plan is for this evening, because I recognize that is the case for most traders. They're trying to build up the trading alongside family life, jobs, etc., etc. I get it. And it's like, where do you sit? Do you do this? Do you do that? So hopefully give you some ideas. I'm going to give you kind of different sort of case studies, if you like, for different traders. And at the end of it, hopefully you'll go away and say, you know what, right, I do need to think about it differently. And I can take this particular one, adjust it for my lifestyle, and now you can move forward. So that's what we're going to cover today. But let's go on with it. We've got an hour to go, and we've got a lot to talk about. And I got this little passage here. You guys must have read Reminiscence of a Stock Operator. If you're a new trader and you haven't, this is a must read. It's such a great book, old school book, 19. Actually, this will be a good one, right? A first edition. Well, I'm excited about my first edition of Studies in Tape Reading by Wyckoff. I wonder what first edition is going for on this bad boy. Oh, there's next year's goal to get one of those. Okay, anyone's got a first edition to sell in, then let me know. I might buy it. Okay, Reminiscence of a Stock Operator. So section here, it goes on a bit about this old guy called Partridge, right? And this old guy has been trading for a while. And let me just summarize kind of the final thing. I don't want to kind of read too much for it for you, but he basically says, listen, this was Jesse Livermore talking. I think it was a long step forward in my trading education when I realized at last that when old Partridge kept on telling the other customers, well, you do know this is a bull market, he really meant to tell them that big money was not in the individual fluctuations, but in the main movements. That is, not in reading the tape, but in sizing up the entire market and its trend. And right here, let me say one thing. After spending many years in Wall Street and making and losing millions of dollars, I want to tell you this. It was never my thinking that made the big money for me. It was always my sitting. Got that? My sitting tight. It is no trick at all to be right on the market. You always find lots of early bulls in bull markets and early bears in bear markets. I've known many men who were right at exactly the right time and began buying or selling stocks when prices were at the very level which has showed the greatest profit. And their experience invariably matched mine. That is, they made no real money out of it. Men who can be both right and sit tight are uncommon, and I found it one of the hardest things to learn. But it is only after a stock operator has firmly grasped this, should I say, that he can make big money. Okay, so I understand that many traders like to trade, day trade, like to position trade, like to kind of work in and out of positions. There's nothing wrong with that. But the takeaway from that is that when the market is in a trend, when it's a bull market like we're in right now, when at some point maybe we get a bear market, use it to your advantage. So maybe, yes, you don't want to hold positions for days and weeks at a time. That's not your style. But just remember the market you're in. Remember Jesse Livermore's words of, listen, just hold the trades that are working, cut the trades that don't. He doesn't necessarily say that, but we know that's good practice. And just recognize the power of a bull market. I think the big takeaway there, and kind of what he was saying to old Partridge was saying to him, is, when the market is trending and when there's a one-way street, you don't try and fight it. Now, his sort of answer to that was to hold trades. Your answer might be only trade in one direction. It might be try and hold trades for, bigger moves. It might be don't get sucked into, going counter trend just because there's a day of weakness or whatever it might be. So, listen, these guys the markets have been around for a long period of time. Human nature has been the same. The participants changed, but human nature is the same. I'm sure he said something like that anyway. So something to consider. Anyway, let's have a quick look at the charts, and then we'll hit the road with the topic. Okay, so I had this all set up really nice, and I'm gonna mess up with writing stuff and bits and pieces and blah 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 blah. Listen, guys, I want to just remind you, of course, that anything we say this evening, that's flashing because that's behind it. Don't need that. Anything I say this evening, obviously, when I'm going to give trade advice here, it's up to you to make your own commercial decisions, risk-based decisions, and of course, understand the risk involved. Trading, whether you're spread betting, trading CFD, whatever it might be. It is a risky business. You're trading on leverage. You're trading with margin. Things can go wrong very, very quickly. When they go right, it's fantastic. Yeah, you're margined up. You're making a lot on your initial outlay, but it doesn't always work like that. And the name of trading is that we're trying to manage risk as effectively as possible. We're using stocks. We're understanding gap risk, understanding reducing risk with lower position sizes, headline risk, etc., etc. But recognizing that the game we're playing is that we do have that good potential upside and good potential profits, but there's the downsides there as well. So, anyone who's saying this is a free lunch and it's like, oh, it's just do this, just do that, and everything will work out well. Not quite true. A lot of traders can make money, but it's keeping it that's the deal. It's managing the risk. It's kind of making sure that you're not giving too much back. You're kind of never going to have an equity curve that's nice and steady. But if you stagnate for a bit, give a bit back, and then kind of pull back up to new equity curve highs, you're on the right track. You don't want to be this kind of feast and famine and constantly blowing up and all this type of stuff. And that comes really with good risk management. So yeah, just make sure you understand the risks involved in trading, please. Okay, I'll introduce myself quickly. Those of you who don't know, I know you do know, many of you have been here before, and I appreciate you turning up every Tuesday evening for this. I will hopefully make it worth your while. My name is Mark Holstead. I've been trading for a couple of decades plus. I run Traders Mastermind. It's a daily email, got a podcast, got more content on the website there. It's all free. Help yourself. Send an email out every day. What else do I do? That keeps me busy, all that stuff. Obviously, look at these beautiful markets we've got at the moment. Okay, let's run through a few things. Listen, we are in a bull market, right? We have, and this is, I think today is a real test. Now, the Dow is up a hell of a lot today. Real big move. We've had a multi-day move from those kind of shut-up-in lows back last week. We had the gap over the weekend, which we've had 6 weekends in a row, by the way. And so we've rallied from that. Now, today is interesting because there's been a lot of bad news on AI, right? We've had, where's my notes? I note this stuff down. We've had, SoftBank sold Nvidia. We've had all this AI infrastructure stuff saying it's going to cost $5 trillion. Sam Altman talking about open, blah, 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 blah. I'm not interested so much in the details, but there's just been a lot of negative news flow on AI. Nvidia was gapped lower. NASDAQ was kind of quite low at one point, and it's clawing it all back. This is the kind of the tell, right? When they talk about poker and tells, this is the tell. In a bull market, you should shrug off bad news. That's exactly what's happening now with this market. And I'm talking about US equities specifically. I'll talk about some European stuff in a moment, and some of the FX pairs. But it's shrugging off bad news. Yes, we had the pullback. We're shrugging off the bad news a little bit today. A little bit of rotation into Dow-related instruments, kind of away from tech. But tech is still doing okay, considering the bad news that's hit it. Now, can it continue? This is the thing, right? When you say this, we don't know for sure what's going to happen tomorrow, what's going to happen the next minute. We don't know that as traders. But we start to build a picture. We start to say to ourselves, okay, the market was derailed a bit. We had this kind of news coming out, which was supposedly good news. The tariffs were sorted out with China, and it rolled back from that. That was a little tell that perhaps we're going to pull back. Now maybe we've got a tell in the opposite direction that we could push back to highs. But of course, other news can come out, and we're constantly evolving, adjusting, and seeing how price responds to news specifically. So at the moment, pretty good price action, right? YM's back to Dow's almost back to highs. At a 1,400 point rally off those lows. That was the thing I'd highlighted there. Get rid of this. ES doing pretty good. Russell struggling a little bit. Gold's kicking back into life. This will be interesting because we had the volatility expansion, this big whole run up. We had the volatility contraction as we've had the last kind of couple of weeks, which was overdue, right? We always get volatility expansion, contraction, but if a breakout today, can it continue? And are bulls still 30 to accumulate gold? at this point, it's still no man's land for me. It's like, oh, do we trap and roll back? Do we push the highs? Personally, I'm looking at this just waiting for it to kind of resolve itself. I think the better trades were before. Now let's just see, does it come back and kind of shudder back through the lows? Do we squeeze back through the highs? Do we consolidate at the highs and maybe there's a trade for a further breakout, having set this trap over multiple weeks? That could be something to kind of look out for. Crude oil completely out of play. Like it just feels like it wants to do something, goes the other direction. If you're a range trader, you're probably loving this, but I don't see much edge in that. One thing's I think is quite interesting at the moment is Bitcoin's behavior. This isn't good price action, and I don't have a trade yet. And again, me sharing stuff with you isn't to say, hey, this is a trade idea, go ahead. But from my perspective, I look at this and I think, you know what, this level's held so well. Now we rallied above it. If we come back and start breaking that, that's a trap. That feels like a big trap, especially when you've got a lot of kind of bullish undertone around everything. If Bitcoin rallies, does this, and comes back and breaks this level, this is a trap. And so, does that set up a little flush short? I wouldn't want to overstay my welcome because Bitcoin's a funny one, but if you saw this on any other instrument, you'd be like, hang on a second, this is held really, really well. It's 100,000 whole number, been buyers just dipping under, fine, little thin overnight markets, rally back up, looks like it's breaking out. This, if it does roll over hard and starts to break out those lows, that's a pretty big trap, I think. So let's see how that plays out. Cable, I think we just wait for the budget now. It looked like it was going to roll. We reversed on that. It's not doing a lot. Aussie yen was in play. It's trying to get up over that 101. Again, is there much edge in this now? Maybe intraday, but I don't see anything massive happening on the overnight session. Copper, I want to talk about copper. Real unusual one. Not many people trade copper, right? And I get it. It's a bit dull, but the news flow is so bullish on the thing. Why is it not going up? People are saying we're going to have a massive shortage of copper. We need copper for all these AI data centers, electronics, all these humanoid robots that are going around washing our cars are going to have copper in them. You get the idea, right? The copper demand is supposedly going to go through the roof. So why isn't copper going up? Argument could be, is it late to the party or is it just priced in? And that's not very bullish. When you've got really super bullish news, I think JP Morgan came out with some kind of prediction on how much copper shortage there's going to be. You'd think copper would be absolutely smashing it, but it's not. So maybe it's a wait and see job. I definitely wouldn't be shorting this here, but if copper's a funny one. And I know many people don't trade copper, and I get it, right? Because it's dull as hell. But when it gets going, it's like natural gas. It's one of those that comes into play every few years, and then if you're so dialed in on it, and you can get to read it, it becomes quite a potentially lucrative vehicle. So keep your eye on copper. I know it's not a common thing. Keep your eye on copper. Natural gas. This is getting interesting. I know, again, I'm talking about stuff that people don't want to, really specifically interested in. But if you're interested in good price action stuff where the supply demand balance is easier to read than others, then I like to go where the edge is. I like to go personally where I think there's edge. And so I'm constantly scanning this stuff at the moment. Great, sure, tech stuff is doing great. US indices, there's edge there for sure. Gold, as I say, I think backing off for a moment. There was edge before on that kind of heavy run up when it was just massive demand, and then we had the rug pull. Copper's building. Natural gas is building. Copper's building as well, but natural gas is building. And just out of perspective, look how some of the moves it can do when it really gets into play are phenomenal. We've not had one for a while, so we may be overdue it. It's been building and building and building and building. So keep your eye on that. If you're a sort of trader who likes to deploy capital and get involved in stuff when things start kicking up, and we have the winter season, there's all sorts of seasonalities that come in with natural gas, maybe worth watching. Of course, Nvidia in play, shrugging off the SoftBank news. Where you gone, Nvidia? Have you gone, Jensen? Yeah, I mean, it's down as you would expect on the day, but it's doing all right. Let's see where it closes. We've got a couple of hours, but it's holding up okay considering the negative news out there, and that big gap up on Monday. Tesla's another car delivery issue. Let's see where everything closes today. Sometimes I think the price action is bullish. I think the rotation into Dow's interesting, but if you're a day trader, going back to Jesse Livermore's comment, is I think, and again, I know I tell another man or woman how to trade, it's up to you. I think it pays at the moment to be aligned on the long side with your day trades. that just my take on things. Waiting for saying, hey, listen, if you're a day trader, hey, listen, I'm trying to attack from the long side. So I'm waiting for those double bottoms. I'm waiting for those little wicks through lows. I'm waiting for those retake of VWAPs that hold. I'm waiting for the flush. I'm playing that game as opposed to trying to trade both sides of the coin. Now, is there a time and a place for shorting? Sure. Last week we had, some opportunities there on the downside for A to B trades. But I think, again, not advice. I think that whilst the underlying current is so strong and the rising tide is so strong, as it appears to be, rising tide lifts all ships. Even if you're trading on a 5-minute chart and you're trading a couple of minutes at a time, why make life hard for yourself? Why not go with the rising tide and say, you know what, if I put all of my energy into focusing on finding the best longs I can intraday, then I'm going to get assistance from the trend as well. Now, me saying that, maybe everything shifts, some news comes out and everything goes to pot, but you've got to kind of go with the rhythm, you've got to go with the structure of what's happening. All right, that was a quick walk around. Hopefully we covered some stuff that was interesting. Right, so let me go back to the slides. Got some good slides for you today because we're going to solve this problem once and for all. Let me shift over. Should be good. All right, for trading models for busy professionals. Okay, so yeah, we're good. All right, how to build a sustainable trading plan around work, family, and life. Again, no recommendations here, just ideas and thoughts from a couple of decades in the business and working with other traders. I see a lot of traders struggling with this. And I kind of give you some examples. I'm going to keep it anonymous, of course, but some examples of traders who have dealt with this and overcome it and really dialed stuff in. Obviously I'm on a Jesse Livermore deep dive again. This book's well thumbed, as you can see. It's just well and truly coffee stained and abused and what have you. So great quote. I may as well use Jesse again. There are times when you should be completely out of the market for emotional as well as economic reasons. So sometimes you take a hit. It happens. You're a trader. Even the best of the best take a hit. You look at some of the hedge fund performances. Sometimes they just have awful years. You're like, whoa, you guys are managing billions. That's a lot of drawdown. They step back, they reassess, they reevaluate, they come back. Does not mean that it's the end of the game, unless you choose it to be. So, sometimes you've got to take a step back. And sometimes you hear people saying, oh, the market's doing this and it's always so easy to trade and blah, blah, blah. Ignore it. So you're running your own game, you're playing your own, you're on your own journey, you're playing your own game. If you have a period of time where you need to step back and reassess, then do that. You're playing the long game, you're not playing the short game. Okay. So let me make sure I'm on the right screen here. Okay, done disclaimer, you're good at that. Okay, so reality of a developing trader. I get it. Right, most traders aren't full-time, right? You don't have the time to be sitting there waiting for every opportunity. You've got a job, you've got family, you've got commitments, and that's okay, right? Because you don't need loads and loads of screen time. You kind of just need to cement what you're trying to do and what your approach is. And a lot of traders think this, and this is a discussion I have quite a lot with developing traders who are perhaps, doing this alongside a job and are trying to, build the trading up so they get to a point where they have some options later on, what they decide to do with things. And they kind of see the job as a negative. They're like, oh God, I've got another Zoom call and I've got to go to the office, or I've got to see a client, or I've got to go into work, and the market was crazy. Then if I'd have been there, I definitely would have caught that breakout and this, that, the other, and I just need more time. And every time I do have time to sit in front of the screen, nothing happens, and I force a trade and end up giving stuff back. And I kind of felt this cycle of, I wish I was there, I wish I was here, and I'm never really get anything right. And you've been on this cycle for a while, and I see it so often, right? So this is the idea today, is to really help you think differently. The first thing is you've got to shift your mindset. You've got to say, listen, if you're working at a job, if you're working at a job, you have some form of income, right? That is an edge. If I'll give you ideas and ways that you can trade. Even if you're super busy, you're flat out, very little time, I'm going to show you some ideas and ways and strategies that you can look into to help build your trading up whilst you still have these commitments, right? And I'm not saying necessarily your job, you might be working, you might have family, you're all trying to do everything, stay healthy. You're trying to be a father, you're trying to be a husband, perhaps you're trying to be this, you're trying to work. There's a lot going on, and trading kind of takes the scraps, but that's okay if we're intentional with what those scraps are, right? So reframe that in your mind, okay? want to make sure that you have perspective and say, listen, I'm fortunate to live in a country and to be in a position where I can actually learn to trade. I do have my job here. I've got a roof over my head, blah 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 blah, all the stuff that we should know, and we should kind of remind ourselves. You've got the opportunity to trade. Many people don't. And so you're looking at it and saying, okay, fine, sometimes I feel like this hinders my progress in trading. That's what I really want to do. That's what I want to do more than anything. I want to become a trader. I want to make this something substantial. But just remember that this is allowing you to do it. It takes the pressure off. You're able to kind of learn to trade without worrying about what the equity curve is doing per se. You haven't got to take money out of your pot, all this type of stuff. So it's a real, can act as a real support, and it's that mindset shift that I think kind of helps. And a good way to frame this is to say, listen, your career doesn't compete with trading; it's supporting it. When the time's right, you'll have options. So you hope you'll have options. Okay, so I always think that we should look at trading as an entrepreneur, right? You are the CEO of your trading business, and a good CEO they just solve problems, right? They say, okay, what have I got? I wish I had more capital to build this rocket. I wish I had more resources to do this. They don't have it. And so, if you're CEO of your trading business, you need to say, hey, solve for X, right? What constraints do I have? What time do I have? What capital do I have? What experience do I have? Wishing that I had more time, wishing that I had more this, it's just no point. It's like, okay, work towards that. I remember a guy many years ago, he started up this business, and he was doing electronics for, what firms was he doing it for? It's quite a high value demographic. It was like aircraft or something like that. So it was like a freelance. It was all like had all his qualifications, all that type of stuff. Very experienced guy, smart guy, and he was doing I think it was electronic for aviation electronics. And he hired this unit, and he rented this unit. And he kept saying, I can't get it going because I need more capital. And I've been saying to him, for what? Well, what you need capital for? Like, surely you just kind of get yourself out there, word of mouth, start doing some work for people, do a good job, charge a reasonable price, be reliable. You're not building anything specific, you're not inventing anything major, right? And his mindset was, no, but every business needs capital. I need to get funding. I need to do this. I need to get this workshop going. And I remember saying, I understand what you do, mate, and I get it, but I don't see why the capital is a constraint here. And I just had this discussion with him, and it kind of stuck with me, that, because I thought, trading is a lot like that. A lot of traders say, if I had a bit more capital, if I had more time, and often you're looking at it through the wrong lens. And sure, does it make life easier if you've got a bigger pot? Of course it does. Does it make life easier if you've got more time? Of course it does. We're not saying it doesn't, but we are saying that there's a solution to be had with the constraints you've got. So start thinking like a CEO. Start saying, okay, this is what I have to deal with. How can I solve by solving, I want to build myself up as a developing trader, get some consistency, get some proof of concept, so that I have options later on to maybe pivot to more time in trading, or whatever it might be for you, whatever your goal might be. So step one is to audit your time honestly, and ask. And honestly is the real kind of word in bold here, right? It's not, oh yeah, but I could probably squeeze a look while I'm at work, and I can probably do it. No. Be absolutely brutally honest with yourself and say, when can I realistically look at the markets? What's off limits? Like, if you're at work and you're in the office, you might say, well, but I have a bit of time to trade. Yeah, but that creates anxiety. You're there, you're trying to trade, you're trying to watch the market, and then your boss rings you. You've got a Zoom call coming up, a client calls, whatever job you're doing. And so everything has to be dropped. And there's that anxiety that creates, is like, I'm on a Zoom call and the market's kind of setting up a strategy I'm looking for. I'm about to pull the trigger and the boss rings. You can't do that. That's not sustainable. Don't even try to do it. Just be honest with yourself and say, hey, when can I realistically look at the markets? Do you have time in the morning? Do you have time in the evening? Can you glance during the day, but you can't actively trade? Maybe you can manage trades, but you can't move orders, but you can't actively trade. And also time for your family, time for other stuff. It's not a game here of, trading is not a game of, more hours on the seats equals more money. In fact, there's a point where it becomes kind of a negative correlation, right? If you're sitting in bums in seat for so long during the trading day, even if you've got all the time in the world, at some point you're so fatigued, you're so goosed, you're making really poor decisions. So it's not grass is greener. It's okay, what have I got and how can I be intentional with that time? So specificity here, trumps everything. So 15 minutes of breakfast is better than I'll fit it in somewhere as I put here. It's worth, honestly, it's worth taking 15 minutes, pen and paper, no distractions, and thinking really truly about what time you do have. Do you have that time in the evening? Do you have any time in the morning? What can you do? What can't you do? And is that sustainable? Like I said, there's no point in trying to, best case scenario. Is our best case scenario about to do this? That traffic light's no way to work. Don't do that. But you get the idea. You want to be realistic here, because you want to build a plan and a strategy that's going to serve you for the multiple months to move you forward. Because the spinning the wheels and the anxiety of, I've got to work, got this, I've got a call, I've got a client, I've got this, I've got that, I've got that, and I'm trying to trade, and I've missed this trade, and I've got that. That's just worse. It's the worst case scenario, because there's no way that your trading will pick up in steam. There's no way you'll get to where you want to be with that, and you probably drop the ball a little bit with your job, and so you do nothing very, very well. So we're trying to be intentional here. Again, can't sneak trades in between meetings, quickly checking charts mid-presentation. You're either trading or you're working, right? And this multitasking, I'll fit it in when I can, is honestly, trading is so tough, as you know, right? You've got to be so dialed in. We are competing against the best in the world, the most capitalized firms in the world, the brightest minds in the world, trying to carve out our own little piece of edge. And we're trying not to compete in the arena they're competing. We're trying to, whatever our edge might be, whether it's a bit of price action intraday, whether it's kind of spotting some sort of, algo that we're front running, whether it's whatever it might be, right? Whether it's combining some of the news flow with price action, we've got to try to carve out our own little edge as traders, and it's tough. It's super tough. And so we have to be able to put our full focus in, even if that is only for a few hours a week. That's enough. And I'll show you some ideas in a moment. It is enough. And it's the intentionality that you put into that actually creates the kind of upswing or potential upswing in the equity curve. Okay, so step one was sitting down, working out when you can actually trade realistically. Some different case studies in the moment about maybe shift workers or 9-to-5 workers, and I'll show you those. So number two is your personality fit. So maybe you don't know this, maybe you've not been trading for too long, maybe you have and you kind of already know who you are. This has got to be right, and this will help adjust and adapt. Again, our goal here today, I know when you go away and you kind of do this stuff, is to come up with a plan that helps move you forward, that you can work with for a period of time, audit the progress, make some course corrections, go again, so you can start actually making forward progress rather than sitting there spinning the wheels and sometimes going backwards. So ask yourself, do you crave price action? Crave, maybe the wrong word here. Do you prefer calm? Do you prefer short-term price action? Do you happy to hold stuff? Are you happy to hold overnight risk? Happy to hold stuff for multiple days? Can you detach yourself between sessions? Can you step back? How do you feel about this type of stuff? And by the way, this isn't always set in stone. You can adjust and adapt this as you improve as a trader. 20-something-year-old me, glued to the screen like an animal, sitting there scalping away, Dow, watching the price action, looking for these algos that had just come out, taking opportunity on those crude oil when it was kind of coming off those highs that Goldman was there all day long. 40-something-year-old me now, like, okay, I want to trade in bursts. I don't particularly want to be sitting here all day long staring at the screen. If there's opportunity, great. If there's not, I'll step away, hold a position for a couple of days. Great. If I think there's opportunity, think there's an intraday opportunity, I'll do that. So and I wouldn't dream of doing that 20 years ago. So it's not set in stone this for life, but where are you now and what are you kind of comfortable with doing? Okay. So case study number one, the full-time worker. Maybe this is you. You could have 30 minutes in the morning for adjustments. So in other words, you're getting ready for breakfast, you're eating your cocoa, maybe you are eating Cocoa Pops. You're eating your nutritious breakfast in the morning with your coffee, and you've got 30 minutes for adjustments. You want to make decisions, but maybe you want to make adjustments. Maybe you can make adjustments. Again, maybe you don't. Maybe it's off limits. Just giving you some ideas. In the day, perhaps when you're at work, you can glance at charts on your phone, you can look at alerts, but you can't manage trades. So in other words, maybe if you say, if this price level breaks and I get an alert, I want to move my stop up, something very, very simple you can probably do, not super time sensitive, but it's something you can maybe do at work, then write that down. That's something you can do, but you can't sit there watching the damn open on the Dow on your phone and trying to trade it on your iPad, the other and being on Zoom call. It's just not going to work. So what can you do? Maybe you've got an evening. Maybe evenings are you're back at 7 o'clock. You've got an hour for analysis or entries, or an hour to potentially look at the close of the US session, or whatever it might be. And obviously it's going to depend on the time zone that you're trading from as well. And then a weekend, you don't want to be glued in front of the screen and completely, see you later, family, right off you go, you do your own thing. I'm going to sit in front of the charts and try and decipher this game. No. Fine. Maybe you can carve out 2 thorough, real deep hours into this and not eat into kind of your relaxation time, your family time, your hobbies, whatever you kind of choose to do. Again, realistic. We want something that's realistic and sustainable. There's a guy ages ago, this PT guy, and he was saying, fine, some of these diets work really well, right? Maybe you've been on your diets and stuff. Some of these diets work fantastic well at stripping off weight, but is it sustainable? No. You're better off to do something you can stick with for life that's going to keep you reasonably lean. And maybe you've got to dial it in a little bit now and then, but having this type of process of, okay, you have a gym regime that rolls around your work and your other commitments. You have a diet that allows you to go out and have a meal out. It allows you to do this and do that. And that will keep you kind of broadly in line. If you're going to fully extreme, at some point you're going to have to come off that extreme, and you get this ballooning back on the body fat percentage, hoots back up and stuff. It makes sense, right? It's common sense, and we all know this. But it's the same for trading. We're not extreme here. We're trying to just compound the progress bit by bit with a sustainable model that you can work around who you are, with your commitments, so that I'm making some progress. This month I made progress. This quarter I made good progress. Last year was great. That's what you want to be, because progress is never linear as well. At some point you get that kind of shoot up and go, hey, things are clicking, things are working. You just don't know when that's going to come, but you have to have the steady pressure in the same area to get that breakthrough. All right, so case study number 2, for want of a better phrase here, the flexible worker. So maybe you have 3 days on, 2 days off. Maybe you're a shift worker. Maybe you just, that's just the way you operate. Maybe you run your own business and you're able to do that. Whatever, right? All these things are perfectly legitimate, normal ways of working. So you might say to yourself, okay, I've got 2 full days for deeper work. So you might say to yourself, hang on a second. Yeah, I can trade and I can test, I can review, I can monitor, I can do a lot of deep work for 1 whole day or 2 whole days. And so, but then these other days I'm completely out of the picture. So again, we're writing this down. We'll show you ideas on how you build the structure and different frameworks and models from that. But the first port of call, again, is to write down, be honest about where you are, what you've got, time you've got, and the difference between the two. Can I glance at the phone and manage trades from the phone? Well, I'm not going to be placing trades, but can I do something pretty kind of easy, like alert goes off, move, stop up? You could do that from a phone, not time sensitive. Or can I be at the screen? You get the idea, right? So 3 models that I think can work, and I've seen these work for 1 and 2 anyway. I don't want to trade number 3 specifically, but 1 and 2. I definitely know traders. I can think of traders who trade 1 and 2 specifically who work. I can think of one guy who very, very, very busy job. He's always kind of heading off to a capital city. He's always on call for stuff. He's leading a team, super, super busy, and he is focused on day trading NASDAQ in this specific pre-market window when he can get to the screen, right? He does that very, very well, and that's him done. I know other traders who come back and they're busy during the day. They come back in the evening. We'll just kind of sorted this out with him now. He comes back in the evening and he just trades the close. And again, I'll give you some ideas and strategies that maybe you can do that for yourself in a moment. But he says, you know what, I like the fact that I can switch off. I don't want to do anything else. I don't want to think about trading. I want to do my job. I'm in charge of a team. I'm managing this. It's an important job to do. I have to deal with customers. I have to deal with my guys, blah, blah, etc. I don't want to be thinking about the Dow. But when I'm at home, have my dinner, whatever it might be, I can sit there and I can put in some time. And if I see something that lines up with what I'm looking for, great, I'll pull the trigger. If I don't, I'll walk away. So it's that flexibility of being able to say, okay, what have I got? What can I do? So swing trading, structured orders and minimal screen time. Talk about that one in a moment. Focused day trading, your short, intense sessions at specific times you have. And what I call hybrid overnight play. So I added this one quite late, actually. into these slides, because tomorrow I'm putting out on my daily email actually a little bit of research piece. I do much stuff like this, but kind of how to use ChatGPT to pick up some overnight edge ideas. And so this might come into play. What I mean by that is maybe you just scan for markets in the evening, you take trades, you sleep, you close them when you wake up, or you close them the next evening. So you have this day-to-day move, and your whole objective is to catch one-day moves. That's not for everybody, but perhaps that, again, that's something that's perfectly feasible, and we'll talk about how you might consider doing that in a moment. So let's unpack how to find your optimal approach. Okay, so swing trading. Now, personally, I think this suits more people than they like to admit. And I know that many traders love to trade, right? I'm with you. I love to trade, right? We love to trade. We love to be in the mix. We love to be making trades and love to be, taking profits. We all do, right? That's the whole why we're doing this. But I think if you're honest with yourself, especially if you're limited on time, stretching that time frame out a little bit just helps slow things down, helps relieve this sense of urgency from things, drops your shoulders a bit, helps you, you get more time to make a decision. I know some people are diehard day traders, and I get it, right? I understand. But honestly, sometimes I think that the better choice for some traders, not all, fair enough, but some traders, is to just step back a little bit, slow things down, and kind of trade some swings, especially when you're in a market where, there is an obvious trend there, and you're kind of trying to just, match your trades with that trend and take advantage of the higher time frame pressure. So let's go back to the kind of the idea here is that you trade when you can trade, not when the market wants you to. So what I mean by this is you analyze the markets and place orders potentially in the evening or morning. So let's say you're that trader who has an hour in the evening, hour and a half, whatever it might be. You have some time in the morning, maybe not, maybe it's just the evening, right? You come back and that's all you've got. So now you kind of build this playbook and this model where you say, hey, what am I actually looking for? What am I trying to achieve here? And you might come back and say, hey, I've got a screen through a basket of markets that are my markets, and maybe it's a handful of the G7 pairs, maybe it's a handful of the active commodities, maybe it's a couple of the equities. You might have Nasdaq, you might have Dow, you might have gold, you might have dollar yen, you might have cable, you might have a couple of the high beta tech stocks, Nvidia, Tesla, whatever it might be, right? Fine, you choose what you like. You might have DAX in there, and you're kind of looking for something specific, and you're saying, right, I'm coming in the evening and I'm looking at my higher time frame charts, of course, and I'm trying to judge the trades that I like. And maybe that is you're trading a consolidation and a breakout. So you kind of wait for a consolidation and you kind of look to buy a breakout. Maybe you're trying to capture flushes to the downside and you're leaving staggered bids in. The point is here is not specifically about the idea per se in the setup. It's more to say, hey, you can place your orders in the market. The automation is pretty easy now, right? On TradingView, you connect up to Pepperstone. You can have a stop entry order that says, hey, if this level breaks, I want to be in the trade, right? You can have a limit order in that says, if this level flushes, I want to do this. I want to range trade these. I'll put a limit here and a stop here. Again, size appropriately, and you make your own decisions on this. But this is something you can start to build up your skill set. And you can start to say, hey, these are the patterns I look for. These are the markets I screen. This is my time in the evening. You sit down, you've got your hour, you run through your charts, nothing doing fine. You run through your charts the next day. As a level I'm interested in that, I'll put an order in there. Next day it gets filled, and you kind of, all you're then doing is you get an alert during the trading day. You've been filled, you put your stop in, you put your target in if you haven't got an OCO attached. And that's it. And that's the way you trade. And you build your playbook from that. And you might be like, okay, this isn't how I want to trade, but okay, fine. We'll look at another option. But it's something to consider. It really is something to consider. And obviously the edge here is, what are you looking for? Are you looking for those 2-day reversal? Are you looking for this, looking for that? And it's got to be something where you can put those orders in that get triggered automatically, or at least an alert that gets triggered that brings you to say, hey, I want to take this, or I want to make some adjustments. Again, we're working with what we've got. And it's far better to do something that perhaps isn't your number one preferred. Maybe you'd love to be in there scalping all day long, right? You can't do that. That's fine. But maybe this is the pathway to that. Maybe you've got to take a few side steps to get to that. And this is creating this model, this edge over time, so that maybe you can take some time off the other stuff you're doing and get back into kind of more active trading. Downside of this, of course, is fewer reps, maybe slower growth. But again, like I say, I think it depends on, what you're trading, how you're trading. A lot of traders, I think, will benefit from kind of doing this. And obviously the downside, of course, is you're holding trades. So if you're the type of person who worries about positions and is concerned about stuff, obviously size helps. If you're reducing the size, that alleviates some of the anxiety. Of course it does. But if you're the type of trader who's constantly worried about your position, then maybe that's not for you. So let's talk about focused day trading. Again, I know two traders who do this. One of them does it very well. One of them, he's a developing trader. He's working, he's improving. He's definitely making a lot of improvements in this. So this is focused day trading, short bursts, full focus. So if you've got an hour or two, make it count, right? And again, the intentionality is so key. Back to that first couple of slides of, hey, I've got this 2 hours on Wednesday, Thursday, Friday, whatever it might be. So what do I look for? I'm not just sliding in, glass of wine in one hand, go, well, right, what are we looking for now? No. Look, intentionality. This is my, excuse me. This is my playbook. It's where I approach things. Okay, I'm going to look for closing patterns in one specific market. Maybe you're focusing on NASDAQ, and you build your pattern playbook and you say, right, coming in, what's happened? And you go through a filter process, a checklist process where you go, what's done today? You build up a picture of the day type and the character of the day. And then you say, do we have a VWAP magnet trade? Do we have an afternoon breakout trade? Is it a heavy down day flush day? Is there a trade opportunity here? Maybe there's not, and you have to be comfortable if there's no trade and it's a quiet, choppy, barbed wire, dirty candle type day of walking away. That's the downside of this, by the way. But if there is, you position for it. You take a trade, you put your stop in, you do all the things you normally do, but it's intentional. It's focused on that evening session or morning session or whatever time you've got. The other alternative is you do a multi-market scan, right? So the first one is you're focused on one market. And if it's in the evening, like for most people, the UK, the evening, you can trade the US session, right? You come back most of the time, you've got that spell of time where you can potentially trade the US close. Dow, you can trade the NASDAQ, you can trade some of those high beta shares. You can focus on those and build a playbook around the close. And I did a webinar called Playbook for the Close. I think there's something really, nothing fancy, right? That title, but it kind of runs through some of these in a bit more detail. You could just operate that and say, that's me. Plant my flag in the ground. That's how I operate myself. That's my playbook. That's the trader I am. Intentionality. Or you do a multi-market scan. You come in, you screen again, like we said before, you screen a basket of markets you're interested in, and you see, is there a trade I can take at the close? If there's not, I have to walk away. That's the downside. You feel like you're pressured to take a trade just because you have those 2 hours. But actually, in reality, that's building the kind of discipline muscle of saying, you know what, I don't see anything. I'm sitting here, I'm looking for that VWAP magnet trade, and it's just not there. Or I'm looking for the afternoon breakout trade. I don't see it. I'm walking away. And that's tough, because a lot of traders feel like, oh, it's the only time I've got to trade. I'm going to miss that. Everything happens before I come in. But if you do it consistently, if you're intentional about it, I know maybe you're using that word today, but eventually you start to see stuff, and maybe you only see a few trades at a time. Maybe you only see a few bits, but it's worth considering. Okay, so yeah. I put a whole new slide for this because I see this a lot. The common pitfall is you sit in front of the screen, you finally get the time to do stuff, and the market's dead. And you take a little substandard trade because you think it's going higher. And really, it's just revenge for time lost. If you're going to do the day trading thing where you just focus on the last 2 hours or the first 2 hours or whatever time you've got, and you're intentional with it, one thing you've got to keep pumping into your mind and kind of doing the visualization type of stuff and doing affirmations and saying, hey, listen, if I don't see my setup or any of my setups, I walk away. If I don't see anything, I walk away. That is the biggest nemesis to doing this strategy, right? And maybe you do a hybrid of both, actually. Maybe you say, you know what, I'll do this and do that. Okay, final thing is the overnight play. And when I say hybrid, and I've said hybrid here, but I mean maybe do a bit of swing, bit of day. But intentionality, plan it. Swinging in, hoping to see something, never going to work long term. You get away with it for a bit, it's not sustainable, it's not scalable. Do it properly, do it right. If you're here on the webinar, I know you're serious about your trading, right? You wouldn't bother 7 o'clock at night. You've got other things you could be doing. But you're here, you want to learn, you want to improve. And so intentionality and doing it right from the off and building the foundations up means that you look back in a few months and go, well, damn, you know what? I've made a hell of a lot of progress. So the overnight hold play is where you kind of do something slightly different. And hopefully these three ideas have sparked something in the mind to say, listen, you know what? Maybe this guy waffling on about this is right. Maybe if I do work out exactly what I've got, resources I've got, time I've got, I can build a strategy around that rather than getting a strategy and trying to force it into the time I've got. Like, I want to trade the opening range breakout, but I'm not around at the open. Oh, well, it doesn't work, right? So, maybe this is kind of just helping you think through the resources you've got. So the hybrid overnight play is when you can't be at the screen, but you're happy to take maybe day-to-day play. So maybe a close to the opening day the next day. So you take it at maybe 9 o'clock, you buy something for an overnight hold, you close it at 2:30 on UK time the next day. So that'd be the close of the US session, the open the US session, or whatever, close of the European sessions. You get the idea. So your edge is now an overnight play. So you're looking for continuations, you're looking for markets that have broken out and held strong, you're looking at markets that have held on bad news, all that type of stuff. Again, we're not going to deep dive into specific strategies per se here, but you can see how this could be something sustainable. And by the way, if you look and back test and see, most of the S&P 500 gains were overnight. Like something like if you stripped out intraday movements, the edges, the increase in the S&P 500 over the last 10 years or whatever it is still the same. So if you're trading that, you could potentially use that as edge. I know it's not for everybody. I appreciate that, but I want to give you some different ideas. And this is kind of some of the research I want to include tomorrow just to show you. QQQ is the NASDAQ ETF, right? So it's basically like saying, okay, if I held the NASDAQ from Tuesday close to Wednesday open, and actually I've included Wednesday's close here. So the orange line is Wednesday's open. The blue line is Wednesday's close. What would that look like? And it's a rough equity curve, and I kind of got some more to do, and it'll be in tomorrow's email, this hopefully. But you can see how there is edge over the last 50 trades of just buying. And I'm not suggesting you do this, by the way. I'm not suggesting you go out and do this, but just as a point, the last 50 trades, if you did this, and there's a big kind of movement there on trade number 18 or whatever it was, you can see that has had a positive expectancy over the last sort of 48 trades or whatever it might be, 48 days. Sorry, not 48 days, 48 trades, because this is Tuesday to Wednesday. So the point here is that you could start to build a playbook around just doing that. And that doesn't take much time. You don't need to be at the screen for that. Your work comes at the weekend. Your work comes, and you're kind of building this playbook up, comes, just made slides ahead, comes at the weekend when you're able to kind of research this and say, hey, you know what? There's a little bit of historical edge here. And maybe if I use a bit of price action, I can actually just trade on Tuesday evenings. And you might be like, oh, that's nowhere near enough. And maybe it's not, but you see that there's edge everywhere. And the idea as a trader is not to be distracted by this YouTube video, that, this, and the other until you've got to be here all day long and blah, blah, blah. No. And if you have got the time, that's great. But if you haven't, don't throw everything away and throw away what it really means important to you because you feel like you've got to go down one route. There's plenty of routes to go. There's opportunities everywhere. You've just got to mold the strategy to your lifestyle and the way you're working. So weekend workflow, we've all got a couple of hours at the weekend, right? You can do your market scan, you can prepare, you can do your homework, go through your journal, playbook, maybe you're writing some notes down. So you can do a lot of the homework stuff that traders would do normally into their trading day. Like if you've been sitting here, we'll write down what's been going on and write down ideas and thoughts and maybe record some things. Fine, you may not get an opportunity to do that, but the weekend you can do this. So, and you can plan for the week ahead. So there's ways around it, honestly. And obviously, this goes without saying, you've got automation alerts. And what I mean by automations is, you've got a limit order in, right? You've got a stop entry order in. And TradingView is great for this, right? You get a push notification when a level's been hit. You get a push notification when you've got a range. You get anything done. Trade fields, blah, blah, blah. You get the idea, right? And leverage on that. You don't have to be sitting there clicking buttons. So I guess the point is this, and funny enough, I was talking about this morning. Schools are all about attendance, your attendance rate. It's got to be this, it's got to be this. Oh, you've had 3 days off because they're ill or whatever. Oh, it's going to drop and they're going to end up being, digging ditches for a living. Blah, blah. You're like, listen, man, maybe society dictates success by how many hours you put into something, but the big boys, right? And I mean the big boys, like if you listen to people like Jeff Bezos, if you listen to anyone who's create anything of super value, you know what they say? They said the value, and even Jesse Livermore, right? And as we learn this as traders, we learn this is the way. The value isn't bums on seats. It isn't time spent in front of the screen. It's the quality of the decisions you make. We're not in the business of being paid by the hour here. You don't have to sit in front of the screen, sitting there chugging away, right? That's not us. We're making good, solid decisions. Now, if you decide to make one decision a week that pays you well, then that's great. If you decide to make 5 decisions a week, 50% of them pay you well, 50% of them lose 50, risk reward ratio is skewed in your favor, that's going to work. So it's all about being intentional. It's all about the repetition. It's not about intensity of how much you're sitting bums on seats like schools are. And of course, schools are trying to make kids, ready for the real world. Right? You got to sit. You got to have your office. Sit with your bum in a seat in the office. You got to be in the, in the building. Blah blah blah. Right. We are decoupled from that as traders. And maybe you're not, and that side of the whole point of this, right? You're doing stuff that you have to do that. But the reward from trading doesn't come from doing the same thing you do at work or have workers have to do. It comes from making good, solid decisions. And I say, well, I'm mentioning Jeff Bezos. He said something like, and he's obviously completely different stratosphere, right? But he is there saying, my job is to make, 1 or 2 really good decisions a year. The rest of the time, but that's his job. It doesn't matter what he does the rest of the time, right? Because that's how he gets rewarded. So from a trader's perspective, it's very similar. I'm not saying 1 or 2 a year, but maybe it's 1 or 2 a week. Maybe it's 1 a day, right? But that's what you're rewarded for, the quality of the decision you make, not from, I need to be in front of the screen. Now, sure, you need some information to make that decision. I get that, but there's ways and means of doing it. And I think when your mind shifts to that of, hey, I'm being rewarded for quality decisions here. That's how I make money trading. And that's how ultimately I'll end up green on the year ahead. Then it shifts the way that you approach the game. It shifts the way that you kind of look at your trade. So final message here. Full-time fantasy. Listen, your time is what the time you have is the time you have. That's it. Right? You can't change that. Maybe it'll change in the future, but it is what it is. So work with the constraints you've got. Build a structure that fits your life. And execute with discipline, be intentional, be structured, have a plan of action. It's there for the taking. There are so many different ways to trade the markets. You don't have to go down the same rabbit hole everyone else does. And trading, I say, is about alignment, not hours logged and rewarded. Final thing, reminder, you're rewarded for good decisions, not attendance numbers. Okay, we covered a lot of ground there. What time we've got? Time for some questions if you have any, ladies and gents. Thanks, Pepperstone, of course, for allow me to host this and talk about topics that, maybe other people don't talk about. This is real world, right? I get it. And I speak to traders so often who are in this scenario of, I'm just frustrated. I'm working. I wish I could trade more. It's like, listen, just calm things down, reframe it in your mind. Let's work with what we've got. It's solvable. I promise you it's solvable. You don't have to have that anxiety ridden, I wish I was doing this. I wish I had more time. Now, it doesn't guarantee success in the markets. Of course it doesn't. But, the more confident, relaxed way to trade and saying, this is how I trade. How much your shoulders drop and how more comfortable you'll feel about your trading if you have a playbook that works. You're like, yeah, this is what I do. And you speak to the people like, yeah, well, in the evenings I do this, this, and this. Weekends I do this. And I fit it around my lifestyle. Like, oh, right. It's just so much more powerful doing it that way. And I hope that's helped, guys. Right. There's a few questions. Let's see if I can get through these, and I hope that's a bit of some value. And like I said, I didn't say this. I didn't. Do you know what? A couple of questions. No sound or screen, but I only see 2 people saying that, so I think that's an issue at your end, gentlemen, ladies. And I hope it's because we've gone through the whole thing. I'm pretty sure the screen share is working. Otherwise, I would have been bombarded with stuff. Connor, you can't see you. Okay. And okay, back to what I was saying. Yeah, I don't claim to know everything, guys. I've got a couple of decades experience in the markets, but it doesn't mean I know everything. I share with you what I think is valuable. I share with you what I think is effective. I share with you what I see working for others. So that's where I come from stuff. Okay, Grant says, hey, Mark, currently welding my truck. All right, mate. But I just lost my funded seat of 9 months a couple of weeks ago, resetting mentally, and life is happening. But I don't want to go down a cycle of funded, unfunded. Thinking of going live on a small account with micro futures. What would you do right now? Can't stomach making these points back on paper through the prop trade process. Do you know, It's funny. I was literally having a discussion with a trader an hour ago about the prop thing. You know, maybe it's not the time to be kind of talking about this, but I think that depending on what you do and how you do it, it can breed bad habits. I'm not saying they're bad, and I'm sure there's some good things out of it, but the way a lot of them are structured is, you know, they tend to breed bad habits, especially the consistency rule, right? So a lot of these have got this consistency rule. It's exactly what we're talking about. If you have a great day and you have a kind of outlier day, which is what you should be trying to do when things are all in line and you're doing well and you push and you make some good kind of moves, that goes against you in the prop world. And your kind of consistency says, well, I have to then do this again and again and again to kind of make some money. And that's not how traders trade. Now, fine. Again, I'm not here to bash prop firms. They play a part in the ecosystem. They do, and there's some, you know, some good actors out there for sure. But I do think that sometimes some of the rules are so restrictive, they make it sound like, oh, you know, well, we're helping you discipline and we're doing this and doing that. And there's an argument there, but some of the times I think, you know what, this isn't how, you know, good traders trade, man. You have days where you have exceptional outlier days, and then other days you're hitting singles. Why should you not be paid for that outlier day? You know, the whole thing of, oh, you need the consistency and show consistency. Coming in every day and hitting the same amount every day and every day. Maybe you get spells of it, but doing that for a long period of time is just, no one's done that. No one's sat there and gone, okay, I'd make $5,000 a day every day for 50 years. It just doesn't happen. They might have spells where they do that, but absolutely there's going to be these outlier months, there's outlier days. That's just how trading generally is. So I guess your question is, you know, again, you make your own decisions, pal, but I would be very, very cautious about going down that rabbit hole of prop. In the boom and bust of prop, it's boom, it's bust, it's make some, do some. Again, that screws with your brain a bit as well. Again, I'm not bashing props, and I hope I'm clear with that. They do play a part, and maybe they're right for some people. But I think small accounts, building up your business slowly is for most people the better way to go. Richard and Arnold says they can't hear or see. I think hopefully it's your end. Well, not hopefully, it isn't your end, gents, because no one else has reported that. Hopefully you managed to sort that out, gentlemen. Robin says, hi, Mark. Thanks for the great webinar. Appreciate that, Robin. Thank you. As a full-time day trader, Robin, you're here and it's not even for you, mate. As a full-time day trader, I'm curious, what do you think full-time day traders can learn from part-time traders in terms of mindset or structure? This is a really good question. Thank you for asking this, Robin, because this is a great question. Here's the trap of full-time trading. You think because and that's not you, as a full-time trader, you think I'm a full-time trader, let's go sit in front of the screens, I'll make so much more because I'm there. It can be a trap. You could sit there from 6 o'clock in the morning to 9 o'clock at night, especially if you're in UK time zone, right? Or maybe 7 o'clock in the morning, 8 o'clock in the morning, right? If you want to, you got the DAX session, you got the UK session, then you got the US session, and that doesn't serve you. You know, I have opportunity if I wanted to sit here. I have to go to the gym in the mornings. I have to do something so that I'm fresh. I can come in the evenings. And I think that, you know, watching part-time traders who think the grass is greener, actually, when you are full-time, you know, you're more intentional. You can become less intentional, should I say, because you feel like you've got the whole day. You can kind of, the whole day can slip and you take a few little trades. You're not doing this. Whereas, is it Matthew's law, or is it someone's law where you'll fit the job into the time window you've got? So if you've got some time to journal and that's it, and that's partly actually why I keep a timer as well, not just for my trades, but to kind of say, listen, mate, you've got 45 minutes here to go through these trades and do this journaling, and don't take longer than that. You don't need to spend hours on this. So yeah, I think the intentionality, recognizing they've only got a period of time, not falling into the trap that you've got all day, and obviously taking substandard trades out of boredom can be, you know, the nemesis of a full-time trader. So that's definitely something to consider. Robin, Gary Portugal says, great thing. How you doing, Gary? It's not about quantity of screen time. Thanks for the webinar. Absolutely right, pal. Alison says, thank you so much, Mark. Thank you for your support, Alison. Guys, if you're putting up your hands, which some of you are, I don't type your questions into the little questions section and I'll get to it. Not much time, but I'll get to them in that. I don't know what the hands. Bibeka, you keep raising your hand, pal. I'm like, hi. You know, I don't quite know what I can do with that. Whether best thing is to type into the question section. All right. Arnold Das says, maybe for some people, you must have got it sorted out, the feed. Maybe for some people, the equation is less time on screens equals more profits because of less bad trades. Arnold Das, I would say that's true for everybody, honestly, because even as a seasoned trader, you know when to push the throttle and when to pull back. It doesn't. More trades is absolutely not the key. And it is, it's without a doubt, for majority of people, if not all, more trades equals worse performance because you take substandard trades. There's not enough opportunities to be taking a massive amount of trades. And for most people, it's dialing that back, pulling in the reins and saying, hey, I'm trading a bit too much. I'm trading this substandard stuff. Because you know how it goes, right? You're very careful. You're very methodical. You wait for the trade. You take it like it's a beautiful trade. And you sit there, you're like, yep, thank you very much. It's my 3-hour trade. And then the market's sitting. Then you go, I think it's going higher. No, I won't do anything. It's going higher. You click the button. You lose. You click the button again. You lose. You end up giving the profits back from the quality trades with all the rubbish trades. So absolutely less screen time, I think, is the way forward. Now there is a balance of reps. I understand this. As a developing trader, you need some reps, and if you're trading once a year, you ain't going to get the reps in. So there is a balance to be had of frequency of trades and kind of how that affects your performance. And it's kind of, you're trying to bring up your experience level and you're trying to kind of boost your equity curve at the same time. I understand that as a developing trader, and it's a balancing act sometimes. But absolutely, I think that less is more. If you're a scalper, funny enough, you say exactly the same thing to this trader the other day. If you're a scalper, the intentionality of when you're involved in scalping, you're not scalping all day long. Like, I'm scalping when I see momentum to the downside that stalls. That type of stuff. Okay. Thank you, Paul. You say all okay. You can hear me. Lana says thank you. Appreciate you, Lana. Appreciate you, Paul Johnson, as well. Very useful session. Ruben says thanks again, Mark. Would like to sign up to Traders Mastermind. It will be good to reintegrate with society. Again, sign up for the daily email. You guys aren't signed up for that. Do so. Ruben, maybe you are already, mate. I think you probably are. But at the moment, that's all we've got. Denise says excellent webinar. Thank you. Appreciate your feedback, guys. And by the way, I'm not kind of saying this to go, give myself a pat on the back. I'm just reading the questions, and I want to, appreciate and acknowledge the feedback that you give me. Andrew says thank you for the great discussion. Appreciate that, Andrew. Dave, thanks for the webinar. It's been useful. Realigning my thoughts about making the most of trading while working. I'm glad, Dave. That's great, because that's the objective. Hopefully you can kind of sort your brain out with that one. Malcolm says, really appreciate it. Thanks, Mark. Good stuff. Thumbs up. Bradley Wilkinson, good to see you, pal. Great call. Thanks. I appreciate your feedback, mate. And Tamar says, this topic was so needed for me. Thank you. Good. I'm glad it hit the spot. I'm glad. I really am glad. Don't forget your reminiscence of a stock operator. See what Jesse Livermore's got to say about things. Anyway, we're back next week. I've forgotten the topic. It's a good topic. Of course, it's a good topic. I've forgotten the topic, but we'll be back next week. And you can always see, if you register, you can see kind of the outline of the topics. I'll always send out on the Tuesday morning in the daily email, kind of some more breakdown of what the topics are going to be. So you can choose to join or not, depending on what the case may be. But join me. Why not? We have some fun this evening, don't we? Anyway, we've run on a little bit. Thank you for your attendance and your attention and your questions. I really do appreciate it. Thank you, ladies and gents. Thank you, Thomas. See you next time. Take care. Bye-bye.